Mortgage interest rates have been rising in the United States since March of 2022. This can make it difficult for home buyers to find an affordable loan. Fortunately, I have some solutions up my sleeve that can help to combat these rising rates. Let's talk about it. If you're new to my channel, my name is Dianne Ayala Steffey. I am a mortgage loan expert, a passionate mortgage loan expert. I work with clients to educate them on the various financing options available to them. There are a number of reasons why rates are high, but the main reason is that inflation is high. Rates follow inflation, so when inflation is high, so are rates. There are two ways that you can help to combat the higher interest rates. One is called temporary buy down and the other is permanent buy down. On the temporary buy down, the buyer, the builder, the seller, or even the realtor can help to buy down your rate. And what it does, it decreases the rate on a 3-2-1 buy down, as an example, will reduce the rate by 3% the first year, 2% the second, and 1% the third, and thereafter is the actual going rate. We can talk about that. That's one avenue, and it'll save quite a bit of money. Or you could do the permanent buy down, which actually reduces it but for a fixed period, but it may be less of a reduction in monthly payment versus the temporary buy down. First of all, you want to come to a mortgage expert like me to calculate your payment. Your payment's based on a number of things. First of all, we have to look at what the type of loan that you're getting, the purchase price of the home, the taxes on that particular property, what are the terms of that particular note, if you're looking for a 30-year versus a 15-year. So there are a number of variables to consider. Not only that, but in that mortgage payment, you have your principal and interest, you have your property taxes, you have your homeowner's insurance, and depending upon how much you put into that as a down payment, you may have mortgage insurance if you put in less than 20%, or you may not have to have that if you put 20% or more. What I like to tell realtors, rather than doing a price reduction on their listing, is to consider a temporary buy down. That's an incentive that will help the buyers to buy into the property and the seller to provide what we call the subsidy of the 3-2-1 buy down, a temporary buy down. That will help to buy down their rates the first 3 to 1 year of that particular term. But what that does, rather than bringing down the price of the home and ruining the market, it helps to give an incentive to the buyer and more money to the seller in the long run, thereby keeping the purchase price as it is, thereby maintaining the market. I will say that this is not something that's common amongst realtors. They are understanding how it works now, but they do still need to be educated, because I do believe that you'll find a reduction of price is pretty rampant in this particular time period. When will rates come down? I wish I had a crystal ball. I'd be able to tell you exactly when. But keep in mind that rates are cyclical. Even though rates are right now in the 5s and the 6s, it's really not that bad. If you look at mortgages amongst the decades, we've had rates, average rates over the past, 53 years has been 8%. And I'd love to be able to show you and help to educate you about rates. But rates right now are not that bad. But if you're looking at inflation, inflation is coming down, and we are seeing that rates are slowly coming down. And I anticipate that we will get maybe the rates in the 4s, probably and possibly the latter quarter of this year going into 2024. One of the things I love to do is to educate my referral partners in the market, what's going on in the market, and explaining to them the variables that cause rates to come down or rates to go up, or what does really affect rates. So I work together with my referral partners to educate them. Not all realtors are privy to this information. They hear about the Fed fund rates being increased by 1/4 point. It's been raised for about the 8th time since last March of 2022. And that gives a false sense of information that where mortgage rates are going up as well. Well, federal fund rates just affect the short-term rates like credit cards, short-term loans. But I would love to be able to sit down, have a mastermind with my referral partners and educate them more. And that way, when they come across rates as an issue, then they have the information at hand as to how to battle that or combat that objection. What I want my referral partners and realtors to understand is that rates are cyclical. What goes up will come down. Eventually it'll come down, but prices will not. Prices are continually to rise each and every month, and we see that daily. We see that pretty much all the time. But the benefit is that if you buy the house now where there's less competition, when rates do come down, your buyers are going to have much more competition to deal with, and you don't want that. Right now, sellers are paying for title policy, they're paying for survey, they're paying even for closing costs. That's a benefit to the buyer right now. So that particular buyer can refinance in the future, and that would be great. That way they have that appreciation. And in fact, if I were able to show you how putting down a good sum of money into a home and seeing the appreciation increase, in that particular locality, it's amazing how much that particular buyer would benefit buying now and then refinancing later. So let me give you an example about return on investment. If you were to buy a property at $320,000 down and put down 5% of 320 is $16,000. And say, for example, that particular property appreciates, and let's just say 2%. We know that in your locality, maybe it's better than that. I know in the Bexar County area, it's about 7%. So if I were to take that home and keep it for 5 years, 2% at 5 years is 10%. So 10% of $320,000 is $32,000. So if I divided that investment of $16,000 into $32,000, that's a 200% return. Where can you get that type of investment return? Where? You can't. Real estate is the best type of investment. If you can afford it, you can buy it, and then if the rates are a little high, you can refinance in the future. With the right strategy, we can find a home loan that fits your budget and your home ownership goals. Let's talk about your options. Go to the link below and book a call with me today.